Hello nieces, hello nephews, it's your Uncle Charles here, and today we had a very tricky price action time in the S&P 500. It was going up, it was going down, bouncing between our support and resistance levels, giving us false breakouts, giving us false breakdown. Very tricky, and we're going to talk about it. But first, here's Uncle Charles's Discord, my plan this morning. I wrote it at 7 o'clock. 7:37 a.m. this morning. Well, I had a bull case scenario. Okay, if SPY opened above 438.5 or recapture it 440, 442.5, then 444.5 back in play, I would look to buy the recapture of 438.5 if cleared. Okay, bear case scenario. As long as SPY is below 438.5, I favor more downside. There's first support at 436 to 436.5, but I consider it weak and think 434 point-ish is next. Okay? Now, the levels weren't that bad today, but it was tricky, okay? So here, this is a 15-minute candle, okay? All my levels are based on the daily chart, but I use the 15-minute to execute my trade. So here was the first candle. That orange line right there, that's the 438.5 level. And as you can see, we entered it broke above it on the first candle. Okay, now I'm going to be frank with you guys. Uncle Charles did not have a good time trading this morning. First of all, I usually skip the first 20 minutes, but today I decided to break my own rules. I was very foolish. I was watching for the back test because we captured 438.5. Watch for the back test. You can see that on the smaller time frame that it did back test that level as a support. Where is it? Right there. See how it bounced all the support, but ultimately it failed. This is why I don't like using the 5-minute chart, which I don't use it, but clearly you can see on the 15-minute chart that it did not hold, gave us a false breakout. I got stopped out. All right, so it bounced around a little bit, cleared 438.5. Okay, I bought the breakout. Boom. I had a 440 price target. It did not hit my 440 price target. As a matter of fact, 3 candles right here, we found some resistance around 439.5-ish. Okay, couldn't break that zone or level, and I end up getting stopped out again. Okay, so twice Uncle Charles got stopped out trying to follow his own strategy. Okay, no strategy is 100%. Today was a reminder of that, especially for Uncle Charles. However, I had to still continue to follow my strategy, okay, no matter what. And you can see here, this candle right here, it closed right at 438.5. So we didn't quite lose it just yet. I had a yellow trend line right here that I was looking at. It was looking like an ascending triangle at the time. But it broke down. We lost 438.5. It treated like a resistance on this candle. I didn't enter here, even though in hindsight I should have, and based on my strategy, I should have. But I was feeling a little off my game from the previous 2 trades. Took 2 small losses because, I had a stop loss. And thank God I had those stop loss because I bought this breakdown and it worked well for me. So the win from this trade was able to offset my loss from the previous 2 trades, okay? Because I respected my stop loss and kept the losses small, it was easy to make a comeback. That's why we gotta respect the stop loss. So I ended up taking profits a little early, all right? But still, I was in the green at this point. Now here's what got tricky for Uncle Charles again. I bought the breakdown of this, okay? The blue line is the 436 to the 436.5 level. I bought the breakdown hoping we get 434 because that was my next support below, all right? I told the group, guys, wait for a back test, retest as a resistant, okay, to confirm more downside. But honestly, Uncle Charles bought the breakdown. And when it dropped a little lower, I just set an in-profit stop loss. And around 12 noon today, I just went out for lunch. And sure enough, my stop loss got hit. But luckily, I was able to take a small win. Nothing to be impressive about. But anytime we lose a support level, you always wait for the back test or the retest as a resistant to confirm more downside. But as you can see here, when it retested it, it recaptured. So it did not get a rejection. We enter a resistant if we get a rejection. Unfortunately for the bears, we did not get a rejection here. That's the recapture. So now we got to wait for the retest as a support. It's the same drill over and over and over again. No matter how many times the market makers try to trick us out, we got to follow the strategy over and over again. Just imagine we was robots and we programmed the robot with our trading algorithm. It's just going to follow it over and over again. But because we're humans, you know, we have feelings and emotion. It messes us up. But anyways, so after recapture, it treated 436 to 435, 436.5 level as a support, confirming we got the recapture was successful, and it pushed all the way up back to that 439.5 zone. It went as high as 439.73, few cents shy off of my 440 price target, so didn't get a wabam moment today. All right, so it started basing. At this point, it was looking like a cup and handle. Okay, cup and handle was bullish, but I kept, despite the bullish pattern, I also reminded my group that I will be bearish if we lose 438.5, because anytime we lose a support, that's when we turn bullish. Bearish. That's when we turn bearish, when we lose a support, no matter what the pattern is. So we got to trust the level. So as you can see here, this was the breakdown candle. This is the candle that closed below 438.5. This candle right here, if you look closely, if you watch my video from this past weekend where I explained the back test and go strategy, which really should be called retest and go. I'm going to rename it now, but this is the breakdown. We lose 438.5, and you can see here on this candle, you see that wick? Retested 438.5 as a resistance. That is where you look for entry, or after the rejection, then you look for entry for puts and bet to the downside, level to level. Went right back down. Went a little lower than our 436 price target, actually, support level. Went as low as 435.88. And look at that, at the end of the day, it just bounced right back up. Okay? So from resistant to support, from support to resistant. But I say it's a tricky day because, like I said, we had some false breakouts, had some false breakdowns. That's why knowing concepts on how to trade false breakouts and false breakdown, which the video I made this past weekend, very important. So definitely check it out. Links in the description. Okay? Very important we know these concepts. Yes, I'm calling these out in hindsight, but even in real time, and I do post them out throughout the day, even in real time, I remind my members and myself to make sure this is the strategy. Wait for that retest as a support. Wait for that retest as a resistance, okay? Because you see it happens every day. It doesn't happen all the time, but it does happen, especially on smaller time frames, okay? So, all right, so that's the intraday analysis. Recap of the day for SPY. Okay, now we want to zoom out and take a look here. Okay. Boom. All right. So we are still below the 50-day moving average, and we are still below the 200-day moving average. Okay. So check out the 5-day moving average as well. 5-day moving average at 439.46, and you can see we got the rejection from there. Okay, so remember the power of the 5-day moving average. In the strong bear trend, you constantly get rejections from there. So rejection from the 5-day moving average is a bearish price action. That's what we are getting. Okay, so to be bullish, okay, right now it's around 439. Okay, but to be bullish, SPY needs to stay above my 438.5 price target. Okay, now check it out. It's no coincidence with the SPY bounce today, okay? No coincidence. So, boom, we get that's the low. That's the swing low. This is the swing high. So swing low of February, swing high in March, okay? Look where it bounced, guys. That is the 50% retracement around 436.2-ish now, okay? I give it a zone 436 to 436.5. Give it a zone because there's a lot of noise in the market. But look where it bounced. It's no coincidence where it bounced. Now, based on good old-fashioned technical analysis. Okay, let me fix this right here. I was a little off with that. Okay. So based on good old-fashioned technical analysis, retracing 50% of this up move from the end of February is pretty healthy. It's actually not a bad pullback, okay? Most pullbacks end around the 50% to the 61% retracement zone, okay? From these two levels, from 436.4, that's the 50% retracement, to 430.3. That's the 61.8 retracement. Okay, so based on technical analysis, like, you know, those textbook ones, that's usually where we get, you know, the end of a pullback. Okay, so when would Uncle Charters turn bearish? First of all, we got to continue to take out resistant levels. Okay, so with 438.4 holding this 50% retracement level, we really need to get clear that 438.5 level. Okay, we're above it now, but it could change by tomorrow. And from 438.5, right around here. Okay, blue line, I'll make it white. Okay, from there, that has, you can see it has served as a support and has served as a resistance in the past. Okay, you can see. All right, I also have a level here at 440. Change that color. Okay, now we're about to get a bunch of lines showing up. All right, that level also has served as both a resistance and support in the past. All right, these are critical levels. Above that is the 38.2 retracement level at 442.5. Okay, now I'm seeing another downtrend line right here around here. Okay, had a false breakout right there. So with that being said, if we can clear 440, I would be a little more bullish, putting 442.5 in play, and of course that 444.5 level. All right, it has served as support in the past, and loss of this level has triggered some sell-offs. Okay, and you can see last week it served as a resistance. All right, you can see that. All right, Uncle Charters don't just bring up levels. All right, there's a reason for these levels, and of course, if we can clear 444.5, that'll trigger a squeeze up to the 200-day moving average around 448.4, and then 450 above that. And above 450 would be a breakout of this yellow resistant line right here. That'll be a breakout, very bullish. Okay, but as long as we are below 438.5, 436.4 continues to be the support level, a very critical level. And if we can finally lose that level, all right, if we lose it, look for the retest as a resistance to confirm more downside. That would put 434 in play. All right, 434 in play. That's the level I got. And below 434 will be the 61.8 retracement level at 430.36. All right, like I said earlier, usually at the 61.8 retracement level to the 50% retracement level, that's usually where a pullback ends and begin a new leg higher in an uptrend, that is. All right, so we got it. We technically have an uptrend since end of February. Okay, higher high, higher lows. All right, will this around this area be where that higher low is? Now below 430.36, as of right now, bears are still in control. But below 430.36, I'll be extremely bearish. Okay, because like I said, bulls don't want no lower than that based on the fib levels. Okay, because below that we can drop down to 427. Then I have another rising trend line over here. Okay, all the way down here around 425.9. And below that will be a breakdown of this white rising trend line. I'll change it to pink. Okay, that connects the February 25th low to the March 14th low. Okay, let's see if we get another test of that, and I'm sure bears would love it. Okay, so those are my levels, guys. Those are my levels. And you know, like I said, I'll be very bearish if we can get back above 440. All right, of course, if it clears 438.5, that'll be a good start. But as long as we are not clearing resistance and we continue to lose support, starting with 436.4, obviously more downside on the way. Okay, now we take a look at the VIX here. VIX lost some levels. It lost that 5-day moving average at 23. It lost a 23.6 retracement level at 22.94. So this is not a good sign. So the VIX is acting bearish. It should mean the SPY should be bullish. Today it's acting weird today. Okay, so but as long as VIX is below 22.94, the 200-day moving average is back in play at 21, and below 21 is very bearish putting 1844, then 1744 back in play. All right, and here's triple Q. Triple Q lost that 339 level last week. Today it back tested that, it went and retested that level as a resistant. Okay, so not a good sign. For me to be bullish again, it needs to get back above 339.3. All right, clear the 5-day moving average around 340.76, and then I would be bullish at 344, then 347.5, then 350. Okay, but as long as we are below 339, okay, there's some support here at 337.8, and if that fails, a drop to 334, and then 328.6 is in play. Almost got to 334 today, all right, but not quite. It was as low as 335.79, okay? But overall, the price action for triple Q is bearish. Dow Jones also showing some bearish price action. So last week on this candle, we lost that 346 level. Today, it treated 346 as a resistance. So remember the retest. When you lose a support, you want to see it get retested as a resistance to confirm more downside. Okay, and that's exactly what happened. All right, be sure to check out my video about the trading concept you must know. All right, if you're a day trader or a swing trader. Okay, it's in the link in the description below. Anyways, Dow Jones look like it has more downside. So unless it gets above 346, because that's when I would turn back to bullish. As long as it's below the 50-day moving average, which held that support today, is in play again at 343. 343 fails. That's 340.5 is in play. And then another down move to 337.8, which is support of this white bull flag. We lose that level. That's a breakdown and very bearish all the way down to 336, then 333.8, and so on. All right. IWM still looking bearish still. All right. We officially lost this breakdown of this yellow triangle pattern. Okay. Only way to be bullish is if it reclaims 198.85 to put 201 back in play. But as long as below, all right, 195, then 188, 195, then 192, then 188 is in play, okay? And here is Apple. We had a false breakout scenario last week, okay, for Apple, because it closed back within this blue bull flag. All right, the big level that I felt like we lost was 166.3. That's his white trend line, right? Well, white line right here. And you can see that SPY retested that level as a resistant. Okay, so not looking bullish, looking bearish, and it still closed back within the blue bull flag. All right, so as long as it's below 165, my next downside target is at 161.47 with 158.6 below, then 156.5. Okay, only bullish if Apple is back above 166.3. And here's Tesla still holding above the 50% retracement level around 972 to 973-ish, okay? And it managed to close above the 5-day moving average at 994.9. All right? As long as it's above the 5-day moving average, 1036, the 61.8 retracement level is in play. And if that clears, all right, 1128 is back in play, okay? If we lose that 972 level, 944, then 907 is back in play. And when I would turn bearish, okay? When we lose the support. All right, guys. So that's what I have for you guys today. Hope you guys found this video useful. And family's important. Uncle Charles loves you.